Hello everyone, thanks for joining us this morning and welcome to this educational presentation of This Strategy Can Kick Your Trading into Overdrive. Now I know a lot of students are always worrying about the method they're trading because they feel that they don't really get involved in the big moves that happen in virtually any market, whether you're trading stocks, futures, currency pairs. In fact, I always get emails coming from students that say, Steve, I just keep missing those big moves. They're the ones that take off either based on some news or based on some event. And with today's strategy, I'm going to share with you the entry rules. And this strategy is specifically designed to get you into those big moving stocks and futures and currency pairs. Now, for example, Yahoo Finance reported in April, this last couple of months ago, that Chevron was going to acquire major Houston-based area upstream energy company for about $33 billion, which is, okay, great news. Now, if you looked at that actual chart of APC, that was the actual company they were thinking of acquiring, you would have seen here that the news came out at this point. This is where I start to get emails, and this is where students start to ask, how come I can never get involved in these big moves, okay? How come I can't kick my trading strategy into overdrive where it will notice things that are going to happen prior? Now, let's say you had even decided to hold on to this. Let's say you were lucky enough to own it. Well, the stock continued to go up even higher and higher. But what if you had missed it entirely? Well, with the rules I'm going to be sharing with you today for entry of this specific strategy, you actually could have entered right here. And again, another chance right here. So this strategy generated buy signals actually 2 weeks before the news came out and a 30-point gain. So you're going to get the complete entry rules and see how easy it is to apply on our platform, the PTS Primo charting platform. This is the educational platform that teaches you actually how to trade. So, welcome once again to this Saturday presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you're new to my webinars, we are specifically an educational company only, meaning that our only goal is to educate you. I've been trading for 40 plus years now. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and out of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist is just someone who made markets in roughly about 50 or 60 stocks. So, the reason why I say we only focus on education is because in my 4 decades of experience, that is the one thing that's really missing from most traders' trading plan. You see, everyone feels that the secret to trading and to really, being a successful trader is to follow or mimic someone else's trades. I mean, think of it. How do you process and define your own signals? Do you go to a chat room? Do you watch the traders on TV talk about what to buy or sell? Do you go to chat rooms, or do you wait for all the indicators to cross over or for any type of fundamental news to come out? That's the way most traders trade, myself included, when I first started 42 years ago. But see, you're not basing your entries or your trading decisions off of what the market's telling you. You're basically basing them off of what someone or something else is telling you. And this is what leads to roughly 85% of all traders failing. What you have to do is be educated into what the market is telling you, and then you can make your own trading decisions. In my 42 plus years of trading, this I have found is the only way one can become consistent. So that's my goal. I teamed up with Pro Trader Strategies to simply educate traders so that they can be in charge of their own trading. And we have students now in over 115 countries and in virtually every state in the United States. And hopefully we can make you a consistent trader with these educational webinars as well. Now, before we begin, as always, we're first required to share this with you before we start, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using the entry rules to this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future, and also please remember that all examples are strictly for educational purposes only. Now, I know I say this before each and every webinar, but we still have a lot of people who have not followed us, so please feel free to follow us on Twitter. I post daily information, anywhere from little bits of financial wisdom to actual signals our strategies have generated, so it's lots of great free educational information, so feel free to follow us on Twitter. Okay, now, with that said, once again, as I stated in the opening statements, we're a little bit different from other webinars you may have attended in that our only goal is to teach you. You see, you'll go to webinars so many times during the week or follow other traders, and they always have something they want to sell you that's some exorbitant price, $500 or $1,000, maybe even $10,000. And they never really give you the education during the webinar. There's always a tease so that you can, make sure that you have to buy the product so that you know what to do once you've purchased it. Well, we don't feel that's necessary. Even if you decide not to become members of our programs and courses, we always give you something that will educate you in our webinars, whether you decide to be members of ours or not. So as you can see, we give all of our attention to teaching you. As you notice, my goal here is not to force feed you signals and tell you exactly what to buy, exactly where to sell it, exactly what time frame or what market. That goes entirely against our philosophy. Our philosophy is simply to provide you with sound fundamental education that stood the test of time so that you can be in charge of your own trading decisions. This is the way I was taught some 4 decades ago when I was struggling with my trading, and what I believe has sustained me now for 4 decades. So my goal is not to force feed you signals. My goal is to teach you how to trade with the specialist edge. Now, we have a good crowd here today, so I know you're all going to want to ask questions about this particular strategy and the rules I'm going to share with you, but please remember that we have a lot of people here, so I don't want to stop for every slide. So if you wait till the end to ask questions, I promise I'll get to each and every one of them. So please remember to wait till the end to ask any questions. And if you're worrying if this is being recorded or not, yes, it is. We record all our webinars, so we'll provide each and every one of you with a link to this recording, okay? So if you missed something, don't worry, you can watch the link, or I should say click on the link. We'll email you and watch it at your own leisure. Okay, with that said then, let us begin today's educational webinar. We're going to be talking about strategy 3A. Now, this is a great continuation method. Let me share with you some of the highlights. As I said, it's a continuation strategy, meaning that we're looking for a trend to start, then a little pause, which allows us to enter, and then we hope the trend continues in that desired direction. Usually when this happens, you have a very strong, powerful trend that can hopefully kick your trading into overdrive. Now, the way it does this is by using a unique Bollinger Band setting. So, when you have a unique Bollinger Band setting, this allows you to get into these really strong trending markets. Now, I'm going to share that with you, what the setting is. Usually this is reserved for members, but we're going to share this with you in today's presentation. It's designed to trade these quick, powerful trends. You can apply it to any market, any time frame, and any direction. Okay, so even though we may have the majority of the slides here pertaining to stocks, if you're a futures trader, if you're a currency pair trader, if you like to trade 5-minute charts, if you like to trade monthly charts, if you like to trade Bitcoin, it makes absolutely no difference. So I just want to let you know that just because you see more stock examples, don't worry, it can be applied to virtually anything. Okay? And then lastly, remember, we want each and every one of you to paper trade this first. I know a lot of you are always saying to yourselves, well, I'll just jump in on Monday and start trading this. Please, paper trade first. We don't want you to start too early, implementing the rules incorrectly. So paper trade it until you feel comfortable. Our edge here is consistency, which means that there will be losses from time to time. That's entirely admissible. All we care about is a strategy that we feel confident in and that we can depend upon to recoup those losses. That is what will make you a consistent trader, not a system that promises to hit these home runs and make you a rich, retired person in the next 6 months. We don't believe in that. We just simply want to have a 2-step forward, 1-step back type of format. Okay. So let's talk about Bollinger Bands. I know many of you may not be familiar with Bollinger Bands. I know many of you are. Let's just give you a brief refresher course. Here are the standard Bollinger Band settings. And Bollinger Bands are a very popular indicator and tool that can be found on just about any charting software package, okay? They consist of 3 bands. Now, the middle band is a moving average. That's all it is. It's a simple moving average, and it's set to 20 periods or 20 period length, all right? So we want to just basically let you be aware that what we're going to be looking at are the upper and the lower deviation, because they are basically the distance from that moving average. Now, the upper band deviation is set to +2. The lower band, being below the middle average, is set to -2. Now, don't ask me to go into detail about this. We're just explaining to you what it is based on. And if you look at a standard chart here, an older chart of Facebook, we see this is the way the bands look. This middle red line is simply a 20-period simple moving average. And then the deviation is on the top, and the lower deviation is on the bottom, okay? Now what we want to do is alter this just a little bit because it's going to help us with our entry. So we're going to change it to our proprietary setting, and these are the settings now. We're going to leave the moving average alone. We're going to keep it at 20. But we're going to change the upper and the lower deviation. We're going to go down to fractions. Instead of them being at +2 and -2, we want the upper band to be at +0.382 and the negative to be at the same, but on the negative side, -0.382, okay? That's all we're doing. We're changing the upper and the lower band deviation. Now, on any charting software, they should allow you to go into your edit box. So whenever you click on the indicator, if you want to edit it, click on the edit feature, and you should be able to change the upper and lower deviations to, they're usually set at 2. You just change them to 0.382 and -0.382. All right, leave the middle portion alone at 20. Now, if you're having difficulty with this, contact your tech support at whatever charting platform you use. Now, I know a lot of students have always asked me, well, Steve, don't have the ability to alter this. Can I use another indicator? You know, I've experimented with Keltner channels, with other bands. They don't seem to generate the same results. So I personally would only apply this to the setting on the Bollinger Bands, okay? Now, here is the standard setting. Once again, that's the standard way of using the Bollinger Bands. Once we change them to our proprietary setting, this is the way they should look. So do you see the difference? It's a lot smoother, and it's a nicely refined way of looking at the Bollinger Bands. Okay, so let's go into the entry rules. Remember, this is going to be recorded, so don't worry if you don't fully understand them or don't copy them down. We will send you a link to this. But remember, this is just the entry rules I'm giving you. I know a lot of you would say, gosh, Steve, this is great, but where do I exit? Where do I place my stop? How do I track this? Remember, that's all in the course, but what we're doing now is just simply furnishing you with the entry rules, because if you've been trading for some while or practice and paper trade, remember, we always require that everyone paper trade this. You'll get a better idea as to how exactly you should exit and how you should place your stop, okay? So let's go on and let's talk about exactly how you would enter if you were looking at a buying setup, and then we'll just reverse that for the sells. All right, step 1. Obviously, plot the proprietary Bollinger Band setting on your chart. So you should be able to do this on whatever platform you're using. If we look at this older chart here in Amazon, we see here, okay, we have a blank slate. We don't really have any idea. For all intents and purposes, it looks like this has gone up so quickly. Every day has closed higher. So most likely you would say, well, you know, all the indicators are telling me I'm overbought. The institutions are starting to sell up here, and that chat room I go to says that I should be selling this. It's too high. So there's major resistance there, okay? This is the way most traders trade. This is the way we make most of our assumptions based off what someone or something else is telling you. I'm going to share with you this simple technique in the entry format so that you can listen to what the market's telling you. Now, once we add, here it is, how simple it is on our platform. This way you don't have to change anything. If you have our platform, you'd simply click on Strategy 3A, click on Indicator, and the settings are already pre-formatted, and you'd see the Bollinger Bands right there, okay? So we are above the Bollinger Band setting. Now we go to step 2. We want to look for 5 consecutive price bars to close either on or above that highest or that top Bollinger Band. So we're looking here and we see, okay, we were below, and now we start a fresh count of 1, 2, 3, 4, 5 closes above. All right, we want to see 5 closes above. It doesn't matter if we're intersecting, but we have to close above. All right, now we're going to enter to buy when price trades 1 tick above bar number 5. So we go to bar number 5, the 5th bar that closed above, and we're going to buy 1 tick above here. Now remember, we did not say it has to close there. So a lot of students make the mistake, and this is why we say you must paper trade so that you fully understand the rules. We don't care where it closes. It just needs to trade there, intra-bar. So if this were a 5-minute bar, it'd have to trade 1 or 2 ticks above. If it were a monthly bar, it'd have to trade above there. It makes no difference what time frame. But remember, it just simply has to trade there. It does not have to close. Many times you'll see it trade there and then close lower. That's okay. We just have to trade there. Now, one of the things I want to share with you, as we see this, we did enter on the next bar, but let's go back. let's go back and see if we had not entered. Let's say the next bar did not trade above and closed lower, and then the next one closed lower, and then ultimately went back below the highest Bollinger Band. Well, that would be negated as a setup, because remember, we're trying to catch a nice trend. And if price comes all the way back down prior to our entry, so we haven't entered yet, and you're watching it, and then it closes below, we would suggest you not take this setup and simply wait for another one. We call it a restart or a recount, all right? So if price continues to stay above this highest Bollinger Band and you haven't entered yet, you can continue to track and wait until it goes all the way back up there. But as you can see, we didn't have to do that in this example. It traded on the very next bar. So we're in the trade, and we're lucky enough to see that it closed higher. Now, as you can see, look at that nice trend that took off. So never again do you have to play that victim attitude where, how come I never get involved in these? How come I can't kick my trading into overdrive? Well, this is the beauty of this strategy. It's designed to catch moves like this, either going up or down in whatever market or time frame you're interested in. All right, so let's look at some recent 3A examples, and then we'll stop for questions at the very end. All right, here's an example in BMA. This was at the mid to end of May. We see here that price has been closing higher, or at least closing up every day. Most students would say, well, Steve, this is going a little bit too high here. I think I'm going to wait for it to pull back before I buy anything. But oftentimes, if you wait for a pullback, you'll miss the trade entirely. So here's the process. If you had our platform, it's as simple as clicking on Strategy 3A, clicking on Indicator, which is the formatted Bollinger Bands, and you see that they automatically appear. Now we're looking here, we want to have 5 closes above, so we have 1, 2, 3, 4, 5 closes above. So we know that our entry is right one or two ticks above here. So we click on Strategy 3A just to make sure that we're in line and this is a valid signal. We click on signal arrows to check our work. Remember, our platform is teaching you how to trade so that ultimately you'll be able to do this on your own. And yes, you have an up green arrow, so this is a valid buy signal. But remember, it just has to trade 1 or 2 ticks above, but if it does not trade and closes below, the setup is negated. Let's see what happened. Well, we entered, and once again, as you can see, it traded there and closed lower. So is this a bad signal? No. It's simply valid. It didn't happen right away, but look what happened ultimately coming into the last week of June here, June 12th. This closed 19 points higher. Let's look at a sell setup. The same rules we're just going to be reversing. That's all we're doing. All right. Once again, someone looking at this would say, Steve, we're in a downtrend, but there's some major support here. This is the Fibonacci support, which I track. I spent $10,000 on that Fibonacci class. And they say that this is where we should be stopping according to their proprietary indicators. And that chat room I go to says that we're completely oversold here. So I got to buy this, right? Well, not really. Let's see what the market is telling us. We don't listen to those things. We only listen to what the market's telling us. And with the aid of one simple tool, we can listen and we can figure out what the market wants to do. All right, so we click on Strategy 3A, click on Indicator, and our pre-formatted Bollinger Bands automatically appear. Now, originally they were above, and now they've dissected the Bollinger Bands. And now what do we have here? We have 1, 2, 3, 4, 5 closes below. So rather than looking at this as some type of support, which no consistency is included in that, the market's telling us the short-term trend is really going much lower. So we may want to sell this if we trade 1 tick below. Now let's just check our work to see if we're learning this correctly. So let's click on Strategy 3A. Let's click on Signal Arrows, and this will verify and confirm if it's a valid signal. And as you can see, there's a red arrow there. So yes, we're learning. We're learning how to correctly spot these. So in the future, we don't have to use the arrows if we don't want to. They're just there for educational purposes to teach us how to identify valid signals. You know, you need to know how to spot these on your own. Remember, we're an educational company, and the arrows are not there to blindly take the signals. We don't believe in that. We want to educate you, so we use this as a way to check your work. Okay, so you know you want to go short 1 tick below. You can either buy the puts, you can have some type of spread strategy if you'd like that has a negative bias, or you can short the stock. It's entirely up to you. Remember, we're not here to tell you how to trade. We're teaching you these high probability setups. So let's see what happened. Well, on the very next trade there, the very next day, you would have gone short play and 14 points to the downside. Look how it gapped down just this past week. Now, someone looking at this would say, gosh, Steve, how did you guys know that? Do you study the earnings reports? Or do you look at the fundamental news? There was obviously some news that came out. No, we don't. I mean, it's not required. News is not a portion of this strategy. In fact, news is not a portion of any of our strategies. We don't look at the news. I stopped looking at news events or economic reports or earnings some 4 decades ago. So it's not required. If you want to, you can, but why overcomplicate your trading when the market, the chart in front of you, tells you everything you need to know? All right, so let's look at another example in MAN. Not much direction here. Hard to tell what's going on. It looks like we're just in a flat sideways market. But if we add the indicator, we see here that price has been above. So we have a total of 5 original closes above right here. So we want to enter 1 tick above. All right, so while we're waiting for it, it didn't happen on the next day. But look what happened on the very next day. We closed below that top Bollinger Band. So this is telling us that we should restart. We don't want to take that setup because most likely the trend is having a little bit trouble here. So let's wait for another count if it shows up, or let's go to another market. Well, let's say you were still interested in this, and what do we have here? On our restart, we have 1, 2, 3, 4, 5 closes above. So it's recalibrated. So we recalibrate. We look at this next setup. We're going to buy if we trade 1 tick above. And on the very next day in April, 10 points in 1 day. Now, someone would say, how did you know this was going to go up 10 points? We have no idea. In our course, we teach you different exit points, we teach you different entries, and we teach you different stop placement. But no one knows how high something will go. If someone ever tells you that, I would probably run because there's absolutely no way to know if something's going to go exactly and stop there. All you can do is have a high probability entry and then use some common, educated ways in which to exit. Some of our students like to take a couple of points, some like to take 10 points. It's entirely up to you. As I stated in the opening, our only job is to furnish you with this information that has stood the test of time. Your job is to make your own decisions. Now, we supply in our courses upwards of 6 or 7 different exit points for you to decide which one you want to take, 6 or 7 different stop placements for you to decide which one you want to take. But ultimately, it's up to you to decide. Okay, let's look at another one in Tiffany. All right, this was coming into the mid-end of May. Someone looking at this would say, well, Steve, this is a little reversal. We have a couple of reversals here. We open, go down low, and close towards the high. You're always telling me that we're supposed to go long bars that close in the top portion of their range, and these are 2 bars. So the market's giving me, according to you, the market tells you what it wants to do, and it's giving me clues that it wants to go higher, right? Well, not necessarily, because once we apply the proprietary Bollinger Band setting, we see here that we're below. So the market may be telling you that these bars are positive, but we are below. So that's telling you that the short-term trend is down. And what do we have here? Total of 5 closes below. So it's actually generating a sell signal. Now, we check our work, and yes, there is a red arrow up there, so we can go short if we trade 1 tick below. Now, many times, these may be positive, and you'll see in the next bar we go back up above and start to go higher. That's okay. At least you didn't lose anything. You didn't sell at the market and then so many times see it go in the opposite direction. That's why we wait for it to trade 1 tick below. So let's see what happened. Well, the very next bar, it did trade 1 tick below, and Tiffany went down 15 points coming into May. You see, we're only using one simple proprietary setting of the Bollinger Bands and a little structure to allow us to get into this really consistent trading method. All right, now people always say, well, Steve, what happens when the trend changes? And you're going to get whipsawed, right? Well, nothing is guaranteed. We said at the very beginning, it's all about consistency. Consistency means we know we will have losses. But the beauty of this is that oftentimes you can change with the trend. For example, right here in STNA, we're going straight up, and then we went straight down. All right, well, we have lost money with this strategy 3A. Well, let's apply the Bollinger Bands. And while price is above the Bollinger Bands, we had a very nice buy setup right here, which could have potentially captured 16 points. So if you had a 16-point profit, I would assume that you would at least, if you hadn't got out, at least protect yourself and raise your stop. Now, once the trend changed, we reverse. And we have 5 closes below. We have a sell setup. And look at that, 10 quick points to the downside. So even when the trend changes, many times you're allowed to get in and out and change with the trends and even with profitable setups. Let's look at Tesla. We know Tesla has been going down as of late. A lot of students always say, well, Steve, I can't short this. It's been going down. But remember, we don't know how low or how high something will go. So it's your best interest not to try and pick bottoms, but to simply go with them. For example, we see here that Tesla has been going down in May coming into June. We apply the Bollinger Bands, and we have a recalibration here. We close above, and now we have 5 closes below. Someone would say, well, Steve, this is just going too low. I can't sell here. Okay, well, if you remember, you're in charge. If you don't feel comfortable, you don't have to take this setup. But please do not try to pick bottoms, because if you had tried to pick a bottom here based off this, look, you would have lost more money. If you were at least open to going short, you could have gone short, and in less than 1 week, you could have potentially captured another 25 points to the downside, okay? How about APC? That's the stock we looked at initially in the opening of this presentation. Remember, students always say, boy, well, Steve, when that news comes out, there's no way for me to take advantage of this. I never get involved in those. Well, let's see how we could have fared with this simple strategy. The news came out right here, okay? This is where everyone, plays the victim attitude and says, how come I'm never involved in those, all right? And then if you had waited a little bit, you would have seen that once you added the Bollinger Bands prior to this news, you had a couple of setups. Actually, you had the first one right here, 1, 2, 3, 4, 5. You would have purchased waiting for it to trade, but look what happened. It went below. So we restart. We're not going to do anything. That's our restart. We wait for a recount again, and now we close above here, and we have a total of 5 more closes above. So look at this. Let me share with you how simple you could have actually entered if you had chosen to do so, because we have 1, 2, 3, 4, 5. Here's bar number 5. We want to buy 1 tick above, and I believe you would have had about an extra 10 or 20 ticks above this, because this is expensive stock here. You could have purchased here the day before the news came out, all right? Now, someone once again would say, how did you know that? How did you know this stock was getting bought out? Do you guys do the research and check out the company? I have no idea. We had no idea this stock was going to get bought out. But strategy 3A gave you a chance to get in simply by using this simple structure of bar 5 and waiting for it to close and then tick 1 price bar above. Now, even though it didn't close there, it still ticked above. You could have gone long, purchased the calls, or maybe purchased the stock. And if you decided to get out right at the very opening of this news, you would have made a quick 15 points in 1 or 2 days. But if you stayed in longer, you could have captured upwards of 30 points in the next 3 or 4 weeks. Let's look at Costco, all right? Right off the bat, we have 1, 2, 3, 4, 5 closes above. We want to buy 1 tick above bar number 5. It's a valid buy signal. Now here we had to wait. So as you can see, we didn't buy it on the next bar. But did we go below the highest Bollinger Band? No. So this is where if you want to, you could wait 1, 2, 3, 4, 5, 6, 7, 8 days, nearly 2 weeks prior to entering. But ultimately, it was still valid, and the stock went up 28 points in the next month. Once again, another trend change, but if you have the structure along with 5 bars above, 5 bars below, you could have entered to buy here for a quick 10-point potential gain. And once things changed, you had 5 bars below, a quick 15-point potential gain to the downside. Let's look at DXCM. This happened just a couple of weeks ago. We're kind of just oscillating above and below, and then finally we have one that's closed right on it. So remember, if it closes on or above, that's valid. So we have 1, 2, 3, 4, 5 closes above. Even though this closed at the low of its range, it is above the highest Bollinger Band. We're going to buy 1 tick above. We waited a couple of days. Now this went below, but it never closed below the highest Bollinger Band, so it's still valid. And we finally entered 19 points in 3 days, okay? This was just last week. And then we look at Google. Here's a very expensive stock, so I managed that you would be shorting this, but you could have purchased puts or some type of spread strategy to the downside. Here we had this large gap down. A lot of students would say, well, this is really oversold. It looks like it's making a little base here. There's major support coming from the institutions who want to buy, so it's most likely going to come up and fill this gap. Once again, I used to trade that way, and it didn't work for me 42 years ago, so please don't start thinking that that type of thinking is going to work now. what is the market telling you? Well, first thing it's saying, it's below the Bollinger Band. So you're looking for a sell setup. You're not looking to purchase anything. You're not looking to get a quick bounce. So if we have 5 closes below, this is a valid sell signal below bar number 5. And someone said, but Steve, it closed at the very top of its range. That's okay. If it goes back above, all right, then we didn't lose any money because we can only go short once it trades below. And look what happened. On the very next bar, it traded there. Even though it closed higher, that's okay. And 130-point potential you had coming into June, this month. So this is what we mean by kicking your trading into overdrive. This strategy, although it's not professing to be 100% guaranteed that every trade is going to generate 130-point potential, it does have a high level of consistency to get you on the right side and to capture these trends. Let's go to another market before we close on to question and answers. Here's an older chart of the E-mini, a 1-hour chart of the E-mini, the exact same rules. We have a buy setup. We enter 1 tick above and potentially could have captured 12 points in the coming day, or roughly $600 per contract. Now, if we look at an hourly chart to the downside, the exact same thing. 5 closes below. We don't change anything because we're looking at a different market. A valid sell setup, we want to go short 1 tick below, which we would have entered 40 points to the downside. This was in May, and this is just last month. That's a total of $2,000 potentially you could have captured per contract if you stayed in long enough. All right, let's look at something that just happened this past couple of weeks in the British pound. Here's a 4-hour chart of the British pound. We have 1, 2, 3, 4, 5 closes above. It's a valid setup. So we want to enter 1 pip above. It doesn't have to close there. You would have entered on the very next 4-hour bar, and that's 90 pips in the next day or two. That's close to $900 potential dollars per unit. And then lastly, the Canadian dollar, 5 closes below. Here's our setup bar to go short. We would have entered right here if we trade below that. We entered on the very next day, a total of 642 pips to the downside, over $6,000 per unit that you potentially could have captured. Remember, it's up to you. Some of our students say, well, Steve, I took 50 pips and I said, thank you. Is that wrong? No. If that's what you want to do, then that's the right way to trade. Remember, as I said about an hour ago, the purpose of our courses is to put you in charge. We're not telling you where to get in and where to exit. We're showing you high probability spots of entry, but we have upwards of 6 or 7 different entry points as well. You could have said, well, once we trade 1 tick below, I'm going to place a limit order somewhere right here, okay? Or even maybe higher. It's up to you. You're in charge. That's the only way you can become a consistent trader. So let's recap before we go to question and answer. Remember, this is a continuation strategy based off a unique Bollinger Band setting that is designed to trade quick, powerful trends. You can apply it to any market, any time frame, in any direction, but please, I can't stress this enough, paper trade first. Do not start trading this on Monday because most likely you'll lose money. I just spent a good time talking to a student who was a member of another course, and he was having a series of losses. And then when we went over his trades, it was not because the method was faulty. In fact, most of the time he would not even have lost any money. He would have made money. He was implementing the rules incorrectly because he hadn't taken the amount of time to research and to become a part of the process and learning the strategy. So that's why we say you must paper trade first. That's the only way you'll really feel that you're a part of this process. Our edge here is, once again, consistency. There will be losses from time to time, but that's okay as long as you feel confident that your strategy is, formidable enough to recoup those losses. And strategy 3A is. So ask yourself, do you think this strategy could have helped your trading this past year? Okay, well, guess what? We have tons more information and edges and techniques to kick your trading into overdrive. We have a great offer for you today. And this is a little bit different from what we usually offer. We're going to offer you our Secrets of a Stock Exchange Specialist video seminar. Now, about 6 or 7 years ago, I was asked to speak in Denver, Colorado at a conference there, a trading conference. In fact, I was the highlighted speaker, and I spoke for about 3 hours, and I gave tons more of different quality type techniques and ways in which to trade the market, things I've accumulated in 42 years of trading. Things like which indicators not to use when trading. Also, the difference between a system and a strategy. I also talked about the #1 chart pattern that you should be applying in all of your trading strategies, regardless if it's one of mine or one of yours or someone else's. This should be included in everything. But I think the best thing on this video seminar that was recorded at the conference is that I gave the complete rules to one of our most consistent pullback strategies. That's strategy #1. Now, the strategy I just shared with you today is a continuation strategy. That means that we're not looking to buy at lower prices or to sell at higher prices. What we're looking for is we're waiting for a trend to continue when we jump on board. Well, strategy 1 is different. Strategy 1 is looking for an overall uptrend, but looking for a sell-off, and that's where you want to buy. Or it's looking for an overall downtrend and then looking for a bounce in price, and that's where you want to sell. So if you're the type of trader that likes to buy low and sell high, this is a great strategy for you. In fact, let me share with you some recent examples of how this worked. Here's an example in Pepsi, which was coming in at the end of May, just about 3 weeks ago. As you can see here, it looks as if the price of Pepsi is going lower. Most students would say, well, we're in a short-term downtrend, I'm not going to buy this. But strategy #1 actually generated 2 buy signals here at the very low of that downtrend, and that was prior to a really nice bounce in the stock. You see how that's different from what I share with you today. Now, I can do this also to the downside. All right. Here's a really nice uptrend in letter A. A lot of students will say, well, Steve, this is the definition of an uptrend: higher highs, higher lows. I'm going to buy this. This looks like it could really take off. The market's strong. I'm going to buy this. Well, according to strategy 1, the overall trend was still down, and it actually generated 2 sell signals. All right. So where everyone else was thinking this was an uptrend, this was simply a bounce in an overall downtrend. And then look what happened. Strategy 1 signaled that letter A was going to go lower, and there was a real nice sell-off in mid-May, as you can see there. So it's completely different from the rules of entry I shared with you for strategy 3A. This is entirely included in the Secrets of a Stock Exchange Specialist video seminar: where to enter, where to exit, where to place your stops, and different ways in which to trade it, aggressively and conservatively. Now remember, strategy 1, along with strategy 3A, and along with all the indicators and all of the techniques I have in the Secrets of a Stock Exchange Specialist training sessions, can be applied to any market or time frame. So it's not just stocks, it could be currency pairs. If you're a swing trader, if you like to trade weekly or monthly bars, if you trade Bitcoin, if you trade currency, it makes no difference, or futures. So this is the beauty of this. Even we have commodity traders who trade strategy #1, all right? It's 3 hours of trading techniques plus all the complete rules to a full-fledged strategy. So this usually runs for close to $1,000. That's how much information is jam-packed into this 3-hour video seminar. Today we are highlighting it down to $37. That is an amazing discount. $37. Once again, I always tell students, you probably spent more than that in commission costs alone this past week. $37, you're getting roughly 40 years of information and techniques plus a full-fledged strategy. But this is for a limited time only. So this is a great, great offer. Take advantage of our Secrets of a Stock Exchange Specialist video seminar. Here's how to take advantage of that. Contact Pro Trader Strategies if you have more questions, but you can simply use the link at the very bottom. Now I'm going to put that link up there on the chat box. If you look on your chat box there on the far right, you'll see that that's a live link. You just have to click that on, and it will automatically take you to the sign-up page for that $37 offer. But that is an online course. There's nothing you have to wait for. It is yours and sent in a link via email, and you can watch it whenever you like. 3 hours jam-packed with information. Okay, now remember I said at the very end we have about 15 minutes left for questions if you have there at the end. So I'm going to leave this information up here. If you have a question, kindly write it in now, and I'll get to it and I'll answer them to the best of my ability. And remember to take advantage of this $37 offer because it's for a limited time only. Okay, Marius is asking, why 0.382 and negative 0.382? Well, that was the way it was taught to me, Marius, some 4 decades ago. And believe me, I've experimented with other numbers. I know that's a Fibonacci number, and I know people say, oh, is there some secret Fibonacci setting? Is that why this works? If you want to think that, that's fine. But I just use it because I've used tons of other settings, 0.50, 1.25, different things. Just my birthday I put in there. This works the best. Now, you're always free. Remember, this is not a system. If this were a system, we probably wouldn't tell you what the settings are, and we just say, just take the signals blindly, and it's up to you. But hey, listen, if you want to alter those, if you get you feel for a better setting, that's the beauty of what we teach. We're not here to teach you that this is the only one way to do it. There are many roads to consistency. And if you feel you've got a better setting that only you have come up with, and that's fine. But we're just trying to share with you things that have stood the test of time. And since I've been trading this for 4 decades, these seem to be the best settings because they transfer over onto any market and time frame. Remember, we don't want to change things simply because we say, okay, well, now I'm going to trade currency pairs today. I guess I've got to change all the settings to match the currency pair markets. Or now I'm going to trade my investment portfolio package, so now I've got to change everything for a longer term perspective. We don't believe in that. Everything should work no matter what time frame or what market you're looking at. The settings should be able to apply. So that's why 0.382 seems to work the best, all right? But feel free to experiment. This is not a system. We do not trade, nor do we teach systems. We only teach and trade strategies. And once again, I go into the difference really in detail in that 3-hour seminar. So that's a great, once again, a great offer to really get some more information with. People are saying, do I have to wait for a disc to be mailed to me? No, once again, this offer is a link. You're going to get emailed a link, and you can start watching this video today. And then the beauty of this is that it doesn't expire. It's nothing like it's a 2-week-long link and then it self-destructs. This is yours for good. You're going to get roughly 4 decades of information that I've accumulated at your fingertips whenever you want. You'll be able to watch this whenever you like, and you'll be able to go back and relearn things, or go back and just get a review of whatever you want, because it's yours. It's yours for life. So it's a great, great recording, once again, of when I spoke roughly about 7 or 8 years ago in Denver, Colorado, in front of a large group there. And these people paid good money to come see me and some other people speak, but it's yours roughly now for $37. But I would take advantage of that, because what a lot of students do, I've gotten a lot of emails pleading with me, Steve, to change the prices. What they'll do is they'll get the recordings to a lot of my webinars with limited time offers. And then 2 weeks or even a month later, they'll say, Steve, I was out of town, or I was on the fence deciding that now, I really want to do this, but it seems like it's gone back up to $1,000. Can I get that $37 deal? Well, Pro Trader Strategies handles the course pricing, and most likely they'll work with you, but usually if you wait that long, you won't get that $37 deal. They may charge you a couple $100 or something like that, but it's your best advantage to take care of that. If you go out to lunch today, most likely you're going to spend more than $37 if you go out with someone, and you have a nice lunch on a Saturday afternoon. So $37 is going to last you a lifetime. Michael is saying, I have no question. I just wanted to say, as a new student, the company stands behind the product with great customer service. Oh, thank you, Michael. Yes, that is one thing I have to say, too. We have tremendous testimonials about our customer service. We have a platform. We also have our courses. And even with answering your email questions, we really want to take care of you, because, as I stated, we're not here to sell you a system and say, good luck with it, just keep trading it, it'll eventually work, and thank you very much for your money. We're an educational company. We want to make sure that you learn on your own. Most of our students stay with us maybe a couple of weeks to a couple of months, maybe 6 months, and then that's it. They're on their own. We're not asking them to continue coming back to our site every day, to come to some chat room or come to some new webinar where they have to buy things. Once you learn this and you feel confident, you can apply it yourself, you're on your own. So we really put a lot of stress and we put a lot of attention onto our customer service to make sure that you can go out on your own, to make sure that you see the videos, to make sure that the platform is working correctly, and to make sure that you totally understand the process. Thank you very much, Michael, and I hope you're enjoying whatever course you have. As we conclude here, I just want to say thank you so much for attending. And you can see we are different from other webinars in that even if you don't decide to spend the $37, we taught you something today. So we always want to leave you with some information or some strategy rules so that you can start using this, because we know that after using it for a couple of days, you'll say to yourself, boy, this stuff really works. I guess these guys are sincere and really trying to teach me. So that's all we want to do. We want to teach you, and we want to make it in good faith by offering our knowledge at such a low and inexpensive price. $37. Once again, you can't beat that price for roughly 4 decades of information. So please watch the video today. If you're sitting on the fence, don't take too much time of thinking about $37, because that deal will most likely go up to $1,000 probably by next week, okay? As we conclude here, I just want to say thank you so much for attending and taking time out of your Saturday. I really look forward to you becoming students of the Secrets of the Stock Exchange Specialist course. but mostly I look forward to you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Have a great weekend. Bye-bye.